Hello, Mayor, council members, and community. This is Sue Hagener, your Finance Director. And today we're going to talk about compliance with our most significant financial policies for the year 2025. That includes our cash and investment policy, our debt management policy, and our required reserves or fund balance policy. These policies were created by researching best practices and state auditor requirements. Their purpose is to protect city assets, to ensure compliance with state and other relevant laws, and to promote the long-term financial health of the city. These reports that we provide to you in the community demonstrate our commitment towards those objectives. It is the policy of the city to invest public funds in a manner which provides the highest investment return with the maximum security while meeting the daily cash flow requirements and conforming to all state and local statutes governing the investment of public funds. The primary objectives of this policy, in order of priority for the city's investments activities, are as follows. Legality. The city's investment will be in compliance with all statutes governing the investment of public funds in the state of Washington. Second, liquidity. The city's investments will remain sufficiently liquid to enable the city to meet all operating requirements which might be reasonably anticipated. Third, safety. Investments of the city will be undertaken in a manner that seeks to ensure the preservation of capital in the overall portfolio. To attain this, diversification is required. Finally, yield. The city's investments will be designed with the objective of obtaining a market rate of return throughout the budgetary and economic cycles, taking into account the city's investment risk constraints and cash flow characteristics. For the purposes of this policy, a fair rate of return will be the band between the average yield of the 90-day Treasury bill and the 2-year Treasury note for the period of time being evaluated. The goal is for the portfolio to generally perform within or above the band. I will note, however, these are interesting times as the shorter-term 90-day Treasury is outperforming the 2-year Treasury. As of December 31, 2025, the city had about $27 million in cash and investments, which is down slightly from the previous year by about 4% due to significant capital project expenditure activity. This capital activity reduced our cash balances from $12 million to $6 million in 2023 to 2024, or 44%. Pretty big dip there. But because we were able to fund so many of our projects with loans or grants, our cash balances only declined slightly. We have about $2.6 million in the local government investment pool, which is managed by Washington State, and about $18 million in actual investments like treasuries, local government bonds, certificates of deposit, etc. What we've got for 2025 is that the city's investments appropriately meet the requirements of state law and our investment policy. However, I will note the city's rate of return fell below benchmarks for the fair rate of return established by policy. It's consistent with prior year statistics, and this is really due to the wacky interest rate market for the last several years, as the Federal Reserve has significantly increased short-term interest rates. Although most recently the rates are coming down. That means that investments we had already on hand would perform at a lower rate than the current investment market. This is what continued to happen in 2025, and I will mention that we have adjusted our investment strategy in consideration of this. We do expect to see a correction in the city's performance as interest rates are lowered and the economy kind of settles down, if you will. This next slide shows our total cash and investment balances as of the end of the year and the prior 5 years. The green line indicates our cash on hand. That's cash in the bank. The yellow line represents our balances in the local government investment pool, or LGIP. And the gray line represents our other investments. Again, the most notable thing about this is the reduction in cash, the green line, 2022 through 2024. Again, primarily due to spending down cash reserves on capital projects. Again, that large green line in 2022, you might remember as ARPA funds, which have been spent down on the city's shop improvement project and technology projects, and it's consistent with our ARPA spending plan that was approved by council. The green line, again, is considerably shorter, again, due to some large cash expenditures on capital projects, but we are very thankful for our resource manager up in Public Works that continues to secure loans and grants for those capital projects. Our debt management policy identifies the city's approach to managing debt. Adherence to the policy is essential to ensure that the city maintains a sound and legal debt position and protects the credit quality of its obligations. The policy mirrors all of our statutory requirements. And when we're talking about general obligation debt, this is the debt that is secured by the full faith and credit of the entire organization. And there's various types of general obligation debt, but we have what is termed non-voted debt. That's the only kind of debt we have, and it represents the bond that we took out on the Civic Center project. This is debt that's taken on without a vote of the people. And you can see the industry standard is not to exceed 4.5% of assessed value. That's the assessed property values within the city of Sequim. The city has $7.07 million in general obligation debt, or at 0.35%, so considerably lower than the legal limits. The city also has $4.9 million in water and sewer debt, which has no legal limits, but per the state auditor's office, total debt service in either one of these funds should not exceed 12% of revenues. I am pleased to present that water is at 6% and sewer is at 6%, which is down from 11% in 2024. Now this chart is what the state auditor calls the Schedule 9, and it lists all of the liabilities of the city, including loans, as well as compensated absences, which I'll talk about in a second. Down the left-hand side, you'll see a description of the loan or the debt, followed by its maturity date, and then there will be a beginning balance as of the first of the year, any new or additions to that debt, any reductions in debt, or in other words, pay down in principal, and then you've got the final balance at the end of the year. So you'll see that we had a total of about $13 million in total liabilities at the end of the year. A word about compensated absences. This represents the total amount that the city would have to pay out to its employees if everyone were to leave the city as of December 31. That has a total balance of about $1 million and is up just slightly from the prior year. Now, before we leave discussions about debt, I do need to mention that our policy does need to be updated. It needs to be updated for recently added state auditor requirements that relate to subscription-based information technology arrangements. These are subscriptions that last more than 1 year. Let's say we enter a 3-year contract with Microsoft. That represents a liability to the city, as well as any leases that last longer than 12 months. We hope to bring the revised policy to you this year. You'll also note there is about $400,000 in subscription-based IT arrangements that is excluded from this schedule, as it takes me a considerable amount of time to revise or add these particular numbers. Now let's talk about our last policy we're going to cover here today, fund balance policy. It can also be referred to as the reserve policy. It can also be called ending cash and investments. Those terms are used interchangeably. What is fund balance? Well, fund balance is an approximate measure of the city's liquidity. It is a cornerstone of financial flexibility and provides the city with options to respond to unexpected issues and provide a buffer against fiscal challenges. It is the intent of the city to provide a stable financial environment for which its citizens can depend on a consistent and quality level of service and for planned future expenditures. I'm responsible for monitoring reserve levels and reporting current and projected reserves during each budget development cycle. The purpose of this policy is to establish an understanding of what are the proper levels and the use of those reserves for the city. Adequate levels of fund balance or reserves are essential to protect against temporary revenue shortfalls and helps to ensure stable taxes and fees. It also provides resources that are crucial in long-term financial and capital planning. Now, on that note, this graph is a visual demonstration of why we need a fund balance policy. This is a graph that shows the monthly revenues to the general fund over a 3-year period. And you can see on the left-hand side of the graph, you'll see a monthly revenue in I think that's May, of about 1.6 million. And then you move to the right, and in the next year's February, you're just bringing in about 800,000. So that's a fluctuation in revenue sources of over $800,000. So as month to month, revenues can vary significantly, and we need fund balance or checking account, if you will, checking and savings accounts, to support expenditures over those time periods. And that's why we have a fund balance policy. So now we're going to talk a little bit about the specifics of our fund balance policy for the most relevant operational funds, which is your general fund, your street operations fund, your water operations fund, and your sewer operations fund. And as you can see, there are 3 pieces to the calculation that we make for what is a required fund balance. So under number 1, we have a minimum fund balance requirement, which provides a financial cushion for revenue fluctuations and cyclical activity, which is just what we saw on the previous slide. So for the general fund, we want a minimum of 15% of ongoing revenues and 20% of, and a maximum of 20% of ongoing revenues. We'll go down to number 2. So for economic uncertainty, we want to provide a financial cushion against unanticipated adverse financial or economic circumstances. Emergencies could include litigation, and there's another calculation that we do for the general fund and streets. For example, we have a minimum of 1% of ongoing revenues and a maximum of 3% of ongoing revenues. And finally, we have a third piece of our required reserve calculation, and that's a future liabilities reserve. Those can be set aside for a specific purpose or some sort of, cushion in the event of adverse, something adverse. Maybe we have to pay a large portion of accrued compensated absences out, which is paid time off and sick leave. And again, that calculation for the general fund and streets is a minimum of 1% of ongoing revenues and a 3% maximum of ongoing revenues. So that's a little bit about the calculations of how we arrived at what do we need in the checking account and the savings account at the end of the day to fiscally responsibly manage our operating funds. And finally, let's look at the actual calculations for fund balance for the general fund, streets, water, and sewer ops. We've got our policy requirements down the left side of the chart, and then we've got our calculations going off to the right side of the chart. Now down below in the bottom left-hand corner, you see that bright green arrow. You can see that's sort of pointing out the target reserve per policy. That's the calculation that we just went through, and the actual ending fund balance for all of our different funds. And so, for example, the general fund has a minimum fund balance requirement of about 2.4 million and a maximum of about 3.6 million. Well, we're sitting comfortably at 3.3 million, which is basically kind of right at the midpoint. All of our ending fund balances for the general fund, streets, water, and sewer meet the minimum requirements of our fund balance policy and have us poised for financial success moving forward. Thanks for listening, and as always, I will be there at the council meeting on Monday night to answer any questions that you have.